I've been preparing for what's happening now for over 10 years now. And I'm still a little bit surprised at the pace that it's happened just in the last few weeks, specifically in the commodities. I mean, we've all been expecting inflation, but I mean, things are doubling every week or so. Just last week, coal was up 75% in a week. We all saw what nickel did the last couple of days, up 100+% in 2 days for nickel. And this is happening across the board, and this is going to have long-lasting impacts. Even if the crisis in Ukraine and Eastern Europe starts to ease, the impacts of what's happening right now this isn't a flash in the pan. This is a trend that's going to accelerate into the remainder of the decade with, crazy volatility along the way. As Rick Rule likes to say, you either use volatility to your advantage or you're a victim of it. And, we specialize in using it to our advantage.
I was just talking to Mike Connor, and he reminded me of, I wasn't there in the 70s, but he reminded me of some old conversations with Rick, where Rick was talking about the legendary commodities market that made a lot of these great investors very wealthy and kind of branded their career. And he was talking about how first oil really moved, and then everything just moves right after that. What's your thoughts on that, and where do you think we are in this cycle?
Yeah, 100%. The required industrial commodities typically move first, and we're seeing that. We saw copper at all-time highs, oil, things like that, industrial metals. The monetary metals tend to lag a little bit because, whether you believe in manipulation or not, they are suppressed, and so they tend to lag. But then they play rapid catch-up, and especially silver. We're seeing gold right near its all-time highs. Silver is nowhere near its all-time high, still less than half, or right about half its all-time high. So at some point, we're going to see a rapid catch-up move. Now, whether that happens, in the next few weeks or sometime this year or even into next year remains to be seen. But the key is being positioned ahead of time with core positions so that you're ready for when it happens and you're not a victim. So let's take a look at a chart for gold here. This chart goes back to the beginning of 2019, and we've remained above this uptrend line the whole time. So we've been in an uptrend in gold, despite how it has felt for the last year and a half or so. But you can see this downtrend line right here, going back to late August of 2020. Once we broke above that, which just happened a couple weeks ago, the next thing to look for is higher highs. That's what any technical analyst is going to look for. So we broke above 1880, we broke above 1920, and now 1960. So we've moved really far, really fast. So I think at this point, it's undeniable that the trend has changed in gold. We're now in an uptrend. And that doesn't mean we're going to go straight up from here. So people need to understand how uptrends work. It doesn't keep going straight. You see some of the biggest downside volatility in a bull market. So we need to be prepared for that and not shaken loose. And that's where having a solid understanding of the fundamentals really allows you to hold through that downside volatility. Now, we could fall all the way back towards $1,800. I'm not expecting that, but we could, and that would still be an uptrend in gold. So don't be surprised if we do see sharp pullbacks along the way, as long as we maintain higher highs and higher lows. That's what we're looking for going forward. And obviously, you can see right here, $2,089. That's the previous all-time high. The high today came within $11 of that. So I wouldn't be surprised at all if we go break above that in short order here. But like I said, nothing goes straight up. So we're going to see downside volatility along the way. Yeah, so that's a common, I think, misconception right here in the last few weeks is people say, oh, gold is rallying because of the geopolitical situation in Ukraine. That may be partially true, but I've been I sit at my computer almost all day watching this stuff. And gold had turned the corner and it began moving up before Ukraine was in the headlines. And let's not forget, we are expecting the Fed to do their first nominal rate hike on March 16th. And typically what happens is gold rallies right after that first rate hike, at the beginning of a rate hike cycle. Well, once something happens enough times in a row, the market begins to anticipate it. So I think this time the metals were anticipating a rally following that rate hike. So it happened beforehand this time. And then, of course, the geopolitical situation just added fuel to that. So there is a war premium that's built in right now. And if tensions de-escalate in the next few weeks, we could probably see some of that come out. But that doesn't mean that this is all based on what's going on in Ukraine and Russia right now. I'm firmly convinced that we're going to see higher highs and higher lows going forward. Let's take a look at the chart for silver, because what's really interesting here is whenever gold makes a new all-time high, silver always follows suit. So in 2020, gold made a new all-time high, right? Went up to $2,089. Well, silver never made a new all-time high above 50. That has yet to happen yet. And I think it's all but certain to happen at some point in the not too distant future.
And, that can mean a few quarters. It doesn't have to mean days or weeks, but it's coming. I'm very convinced of that. So when we look at the chart for silver here, you see, I call it the silver squeeze downtrend channel because that began on February 1st, 2021 at the big silver squeeze movement, which was, if anyone denies manipulation, that was probably the most obscene manipulation I've ever seen. You have a day where you have all-time record physical demand, and then the price falls when supply is stagnant. So it defied the laws of supply and demand. And that started this downtrend line. Well, last week we broke above that downtrend channel. It's very clear here for the first time. And that makes $30 the initial price target. We're not quite there yet, but I think once silver gets above 30, the path from 30 to 50 probably happens faster than most people think. Now it's going to be a tall order getting through $30. We might go up there and tap it, pull back quite a bit, consolidate for a few weeks, and then get back above it. But getting above 30 this year, I think is the main objective. And then once we get through 30, $50, there's not much technical resistance between 30 and 50. And if you're into the mining stocks, there's a lot of money to be made in silver miners between $25 silver and $50 silver.
Why?
Well, there's just so much leverage built into the mining stocks.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.